Thank you for staying with us. We've got a fantastic conversation planned now. We've got His Excellency Dr. Abdulhamid Alkhalifa, the President of the OPEC Fund. Please help me welcome him to this session. Thank you, sir. Really good to have you. Our topic is Nation Development Alliances for Sustainable Investment. Looking at the OPEC Fund and the structure, the OPEC Fund is really fascinating. You've got member states, right, the founders of the OPEC Fund. You operate in many countries around the world. You're looking at investments. You're doing renewable. You're doing all sorts of things. You're looking at global south. You've got South-South cooperation. It's really fascinating. And also to make it clear, you've got nothing to do with OPEC itself, right? So I think that's important. But I want you to explain to the audience some of the most salient issues, some of the most important issues that you focus on at OPEC Fund.
Well, Eleni, thank you, first of all, for hosting us today. And thanks for the UAE for hospitality. Maybe this is a good question to start our conversation. OPEC Fund, as you know, it was established 50 years ago. This institution was established by 12 countries, including United Arab Emirates, our host today. But also it finances non-member countries only. So member countries are not eligible for our finances. It's total opposite to any other institution, any other development institution around the world. Since the establishment, the institution has grown in a very dramatic way, and now we have a portfolio in more than 125 countries around the world. We have channeled maybe more than $30 billion of our own resources. But those 30 billion, because the business model that we are operating with helped unlock almost more than $200 billion. Our business model is co-financing. We co-finance all, mostly 60% of our projects with our partners from other multilaterals and bilaterals also. We have a good partnership with almost, because this business model, we have a partnership and a good relationship with all development institutions around the world. And we had a good relationship with the Arab Coordination Group, which is 10 institutions, 10 Arab institutions. Those institutions are focused on development, some of them bilateral, like Saudi Fund, Kuwaiti Fund, Abu Dhabi Fund, but also some of them multilateral, like Islamic Development Bank and OPEC Fund and also Arab Fund. So we have a good coordination with those institutions.
So we won't be asking you about the oil price today. That's not what you do.
No.
No, I know. And this is the thing, because when we see OPEC Fund, I mean, the work that you're doing is so incredible, because you're focusing on clean water, sanitation, energy, food, infrastructure, education, healthcare, renewables. You're doing across the board. I want to touch on renewables in specific right now, when you have the biggest economy in the world moving away from the climate agenda with the getting out of the Paris agreements. The United States moved out of the Paris agreement. And whether you think that's going to derail investment into renewable energies, whether you are still committed to anything to do with climate change, and that's one of your priorities.
Okay, it's let me maybe tell you about what we are doing vis-a-vis climate change. We launched a very ambitious climate finance action plan that was 3 years ago, with very ambitious targets. We have decided at that time to meet 25% of our finances to be climate aligned finances by 2025. We are well ahead of that target, and we are now in December, last December, we hit 34 of our finances goes to climate. And we are reviewing our goals to be more ambitious. And we are coordinating all of that with our partners. As I said, we have a very good and effective way of coordination with the Arab Coordination Group. We announced a plan that was in COP 28 for $24 billion until 2030. This is a very huge amount when it comes to climate finance, and it will tackle all climate-related issues.
Even the small island nations that you spoke about, I'm assuming.
Definitely. Our initiative, also in the small islands, it will tackle basic things, which is infrastructure and social sectors, but also most of it will tackle climate-related issues. Because when you go to those islands, there is a huge need for infrastructure.
Absolutely.
And we are working with them on a specific infrastructure projects that is very important also to accomplish our climate
and I mean, they need mitigation. They're thinking about all sorts of things because small island nations are concerned about rising sea levels. So I can imagine the work that needs to be done. I want to talk about how you manage risk. Risky economies. I mean, if you're looking at the global south, you've got to weigh up risk. And I had a panel discussion yesterday about this, and the president of the African Development Bank, Akinwumi Adesina, was talking about the perceptions of risk towards Africa in specific are not warranted. In fact, default rates are not anything to worry about, and it makes economic sense to invest in African countries. What's your experience been, and how's the OPEC Fund weighing up risk versus reward? And are you expecting to get a better reward if you're going into what you perceive to be a riskier market? How are you weighing it up?
Definitely, but also a very important piece of information here. These kind of institutions are created to take additional risk, to work in a risky environment. And that is exactly what we are doing in Africa and in all developing countries. It is not only limited to Africa, but when you go to frontier markets, it is very difficult to do business in for example, in a small island. When it comes to the business environment, it is very risky. I usually tell my team that and remind them about why we should take more risk. But when you are talking about those frontier markets, I think the most important two challenges that we face are maybe lack of access to capital, and lack of access to electricity. This is for only Africa. How can we work together to lower that cost?
But you've had successful projects in Africa. So do you believe that the cost of capital is warranted in terms of being that high?
It is, but in our case, we are working with others also to bring it down.
To bring it down.
And also to attract other investors with us. Okay,
so for the last few minutes that we have, I really want to talk about some of the projects that you're most excited about, the projects that you're eyeing out right now. In our previous panel, we were talking about whether we're sitting in a situation where we're worried about the world economy, where the money's going to dry up. We don't know where things are going. Everything's shaky right now. Everyone's trying to see where we're headed. So how is this playing into your investment strategy?
Well, as I said, maybe these institutions are created to take risk and work on in a counter-cyclical way. If there is any additional risk or any additional, even global risky environment, we have to work to make it or to ensure that whatever risks that will be dealt with in very timely way. In our case, we do that through our interventions in small markets, but also in middle-income countries, because middle-income countries also play a very critical role when it comes to development. And we are doing that through many vehicles. We do it usually through intervention in the financial markets. When, for example, we are now providing some of our finances to banks in their local markets, in their local currencies. And that is a way of dealing with this. Innovation in the way that we are doing business is very critical now. And when I say innovation, it is not innovation in terms of IT, but also innovation in financial instruments. How can you put together a financial instrument that will be able to deal with a current situation with a risk environment that is well known, and that is what we are doing.
So you're innovating in terms of financial instruments.
Definitely. So, for example, let me give you a project that is just recently approved. We are working with the private sector in Africa, and we are giving them sustainability-linked terms of finances. Sustainability, because we are a development institution, we are not maximizing our return, we are maximizing our impact. And whenever they are able to meet climate-related targets, our terms will be lower for them.
Fantastic.
Yes, and whenever they
are they easy to reach those targets? Is the question.
Yes, they are, and they are doing it. Okay. So we think they will be able. But this is how you can motivate even the private sector to meet very important targets that might not be relevant to them in the first place. But for us, as a development institution, it is very important for them to meet those targets.
Fantastic. Your Excellency, it was so good to have you with us.
Thank you.
Thank you so much for seeing us and coming here and sharing your wisdom and your insights, and look forward to your next big thing. Thank you, sir.
Thank you very much.
Thank you, ladies and gentlemen. That's it from me.